What's going on, beautiful people? Welcome back to another video. In today's video, I'm going to be again doing a trading recap on a trade that I took today for US 30 and was able to close out on around $1,058. I'm actually going to go ahead and let me go ahead and cancel this out real quick. I'm going to exit right here. Yes. So I took this trade at around 10 o'clock this morning. And honestly, the only thing about this setup that actually kind of annoyed me was the fact that this setup right here, it says $269.60. That was supposed to be $400. And the only thing that pissed me off about this was the fact that I was trailing my stop loss and I just trailed it too damn. I just was too close to entry. So slightly, I wouldn't say annoying. Again, first world problem. Let me not, sit here and complain about that. But nonetheless, it is slightly frustrating, the fact that I was not able to collect more, because this could have been a $1,300 trade setup. But again, total P&L is up $1,000. And like I did yesterday, I sent this obviously in the Discord. This is on the free Discord, link in the description. Yesterday I did $2,725.63. That was a really good trade setup. So far on the week, we're up around $4,000. Can't complain about that, okay? But with that being said, I took this trade at around 9:50, 10 o'clock-ish this morning. But I'm going to be doing a breakdown for you guys to show you kind of like my thought process on this trade. Because again, this was a really good trade setup. Honestly, like, this was pretty textbook, nothing really too crazy about it. So I'm really kind of excited. And again, I'm also going to show you guys that when you follow this strategy, which for those who don't know, I trade SMC. This essentially is a strategy that you can use on the buy side as well as the sell side. So as you can see on your screen right now, the buy example is the example that I hopped into, but then the sell example happened later on. Unfortunately, I did not hop into that. I easily could have, though, and could have made, another $1,000 today. But beggars can't be choosers, right? So let's go ahead and, yes, start new. Let me go ahead and start off at the 9:30 candle, okay? So I'm going to delete these markups right here. I'm going to delete this. I'm going to delete that. And I'm going to delete that. Honestly, I'm just going to delete all of this because I want to show you guys what my thought process was coming out of this. Okay. I want to delete this. I'm going to delete that. Again, bear with me. And then I'm going to delete this. Okay. So first and foremost, right, when it comes to my trading strategy, always start with a higher time frame analysis. So if we go ahead and we scroll all the way to the 4-hour, we can see right here, market is still in a bullish, right? It's still in the uptrend. So because market is still in the uptrend, my bias is still going to be bullish, meaning no matter what time frame I hop on, no matter what time frame I decide I want to trade on, I'm going to be hopping into buys regardless of that, right? My daily bias is bullish, therefore every decision that I make will be buys. One thing I want to make clear though is that a lot of people will think, oh, so like I shouldn't sell. I'm not saying you shouldn't sell, right? That was a question that somebody had asked me the other day. They were just like, hey, well, if your bias is bullish, does that mean I can't sell? Like, no, you can sell. I mean, you can do whatever the hell you want to do. It doesn't matter to me. But ultimately, because of whatever your daily bias is, that's usually what you want to follow, right? You want to trade with the trend. US 30 is in an uptrend. Why am I going to make it more difficult for myself or possibly make a riskier decision? Instead, if I can just trade with the trend, I can just go ahead and just hop into buys. It just makes my life a lot easier, right? So I'm not saying you can't buy. Again, I'm going to show an example of, by following the strategy that I use, how you can make money on the buy side and the sell side, how I could have made money on the sell side today, but I didn't. But ultimately, you want to go ahead and just follow the daily bias, whatever the case may be, right? During consolidating markets, that's when you can kind of go back and forth if you want to. If you're somebody who likes to trade during consolidating markets, go ahead. You want to hop on the buy side and the sell side, totally up to you. At the end of the day, it's your money. You decide how you want to be able to go ahead and make it. Okay. So on the 4-hour time frame, we're still in bullish momentum. So all my decisions are going to be based off of buys. Okay. Hop back down onto the 1 hour. This markup is still something that I've touched up on here and there a little bit, but nothing really too crazy. Okay. The only thing I think I adjusted differently was that this is a 1 hour order block. And then this is my 1 hour fair value gap on the 1 hour time frame. So what I want to kind of point out is that at 9 a.m., right, we had this huge candle, this huge bearish candle, huge bearish candle. Now, there are a few things I was looking for. First and foremost, is it going to respect the fair value gap, right? Obviously, it went down, completely destroyed it. Okay. Second thing I was looking for, is it going to respect the trend? This candle alone could have just completely blown through the trend. And then at that point, right, I could have marked up my change of character. I could have marked up, whatever the case may be. So I was very mindful for the fact that, hey, this could possibly break trend. We can no longer be in an uptrend. Just be mindful of that, right? So I went ahead and just paid attention to that, right? But regardless of, when it comes to US 30, or honestly really any security that you trade for that matter, when you see a big push, there's always usually a correction, right? There's never like a huge push and then it just keeps going, keeps going, keeps going. There has to be a retracement of some kind because the market needs to breathe, right? It's kind of like, for example, if I don't know, you get up too fast, right? I mean, trading is, there's a lot of human psychology involved in trading, but an analogy you could use is, let's say, for example, if, let's say you get up too fast. I don't know. Let's say you were doing something, you got up really fast and you started running. Eventually, you're going to have to slow down because it's like, okay, I'm doing things too quickly. I need to reorient myself before I make a mistake or before I do whatever. Same thing in trading. When you see huge pushes like this, honestly, I get excited because from my perspective, I'm looking at it like, great. I know there's going to be a retracement. All I have to do is position myself in the best case scenario to be able to catch that retracement. That's it. That's all I really look for, right? But you can see right here, huge bearish candle, right? Retracement back up. And another key note is that whenever you see like a huge candle come out of nowhere, there's usually anywhere between, I'd say, around 25 to 50% retracement. What I mean by that is when the candle goes down, whatever the value of that candle is, however many pips that is, expect a retracement to 25% to 50% of the overall pips of that candle, right? Or points or ticks or whatever the hell it is you're trading. So that's basically that, okay? So on the 1 hour time frame, the only thing I did different was I marked up this order block, I think, and this 1 hour fair value gap, right? As you can see right here, there's no overlap between this candle and that candle. So there's a lot of liquidity being left right here in the markets. So when I saw this huge push down, I was like, great, it filled that fair value gap. And essentially now I'm seeing how it's going to react to it. If, because again, with the trading US 30, there's a lot of wicks involved. So most likely at the time in which this was being played out, this could easily go down, but then you could have a huge wick come back up. Market could close at this in the middle of this fair value gap or above it. If it closes above it, cool, that's something to look at, so on and so forth. That was my mindset while I was taking this trade. Okay. So regardless of what happened on the 5 hour time frame, I said, great, let's go ahead, let's hop on the 5 minute time frame and let's see what's going on. Okay. So if we go ahead and press play, boom, we get a huge push on the downside at this 1 hour order block. Now, what I tend to do when I'm marking up my chart on any time frame is I tend to just kind of want to separate each time frame with each different markup, right? This kind of, for some people looking at it, may be a little bit confusing, but like I have a 1 hour order block and it's very close to the 5 minute fair value gap that I had marked up beforehand. I don't like to drag out, right, the order block or anything like that, right? Because that's the 1 hour order block. I'm not going to drag it out on the 5 minute time frame and say, okay, cool, this is my order block. I'm not doing that because this is on the 5 minute time frame right now. So again, a lot could change and a lot could happen. But regardless of, market came here, right, and completely collapsed. We had this huge impulse move, which then created our order block on the 5 minute time frame. So I went ahead and drew this out, and I'm going to go ahead and label it as well. 5 minute order block. Okay, great. And so once that happened, right, essentially all I was doing was looking for a position on the upside. And I also actually dropped down to the 1 minute time frame too on this trade. I remember dropping down to the 1 minute, right? Because on the 5 minute right here, when this candle, again, I'm gonna rewind just actually a little bit more. No. How do I do this again? I forgot. Go back. Oh, here you go. Sorry, y'all. Forgive me. But what I went ahead and did was, again, 9:30 a.m. hit, huge candle collapsed. At that point, I was essentially looking for this right here. Okay. At this point, fair value gap, market closed below that on the 5 minute time frame. I was looking to see if it was going to respect the trend. In this case, it did, right? So I said, okay, great. Now we have another impulse move right here. Okay, so we have a huge red candle, market comes down, we get this green candle right here, and then at that point we get another green candle, huge push on the upside. Okay, so here's my next order block right there. okay? Because an order block is formed whenever you see a huge impulse move. So 5-minute order block. Great. Now that's done. Now at this point, what I decided to do was go ahead and use my Fibonacci retracement tool to find optimal entry points, okay? So the market comes up here to here. This was the trade setup, okay? Now this also was the position on the long side, right? This is what I was looking for. Now, what tends to happen though with US 30 is that the wicks, especially like when the market first opens, because this candle was formed at 9:45. Market is volatile, market's active. You just want to pay attention to what's going on. So what I did was I moved my stop loss a little bit further than what I normally do, just to give it space to breathe, right? I know a lot of people, they get really stuck on their risk to reward, which is fine. It is what it is. But again, this is on the 5-minute time frame. It's only 80 pips. It's not like that's that much money. But the target is to make 200 pips, right? Which again, 200 pips on US 30. Everybody knows you're going to make a decent amount of money doing that, right? So here's essentially my entry, and then I move my stop loss a little bit so that we can give it breath. So I give it room to breathe. Normally what I do is I put my stop loss slightly below the current market low, which is right here at around 46,496, or, you know, just slightly past the end of this Fibonacci zone. So 46,502. I put it just slightly past that, right? Whatever my risk management plan allows me to. But in this case, I made it a little bit deeper. I made it like an 80 pip stop. Okay. So that's what I went ahead and did. So if we go ahead and press play, you can see, right? If I had set my stop loss to where I normally do, let's say like right here, I wouldn't have gotten it taken out. But again, all it takes is one wick to go down an additional 10 pips, and then you're automatically taken out of the trade, and then you lost money for the day. So I say, you know what, I'm not going to do that. Let me place my stop loss just a little bit lower. My risk to reward is going to be a little bit off, but that's fine. So here's my entry. And again, each level of the Fibonacci for me is my take profit. So take profit 1 is the 618, take profit 2 is the 0.5, take profit 3 is the 382, and so on and so forth. And you can see in one candle, right? Market went back in entry. We're in a little bit of drawdown, but market went back in the entry. Take profit 1, take profit 2, take profit 3. And if we go ahead and continue to press play, take profit 4, went ahead and got hit just like that. Okay. So we enter into the trade at around 9:45, 10 o'clock in the morning. And we exit out of the trade, you could say officially at 11:25. So we're in the trade for around an hour, right? Not worried about that, not complaining of it at all. In all honesty, I was out of that trade though around like 10:50. So I was really in it for like just under an hour because again, as I mentioned before, I had a trailing stop loss and it was too close to where the market was. Market hit it, then kept on going up. So that's what kind of annoyed me for a little bit, right? But this is essentially the trade setup. In and out, took an hour, $1,000, done day. Right? Pretty simple, pretty easy to understand. Now, that's the analysis of what I took to literally today, earlier this morning. On the flip side, some bonus content, some bonus information is how to make money on the sell side, right? So market comes back up, right? Does what it's supposed to do. Let's say it keeps on going up. I'm just waiting. Great. At this point, right, I'm going to go ahead and move this. Here's how you can make money on the sell side. Here was another trade idea set up that I completely missed out on. That, again, I'm not really too upset about it, but just something that, you know, I want to just be able to show everybody for 2 seconds, how in 2 setups you could easily, you know, especially trading US 30. I mean, everybody knows US 30 is a beast when it comes to, you know, anything like that. Like if you don't know what you're doing, honestly, you really can get either screwed or you can go ahead and do what you need to get done. But aside from that, though, right, I went ahead and press played, right, press play for a little bit. Okay. Similar situation here, right? I'm going to go ahead and actually move this back a little bit more so that way this is not too distracting. What a lot of people, as I mentioned before, tend to do is that they'll take this order block and say, great, that's an order block that I can now drag along for indefinite future trades. And you cannot do that because it's on the 5-minute time frame. Not enough time has elapsed in the market for that to be considered an order block that you can now use for the next 3 hours. That makes no sense. So I'm going to go ahead and move this off to the side just for a little bit. Okay. Just for a little bit. Okay. So there's one more thing I want to also show you guys as well. Here, huge fair value gap, right? Once the market gave us this huge green candle right here, in my mind, okay, great. We have another fair value gap that was formed right here. Okay. So this is another area that I am paying attention to on the 5-minute time frame because now the market has to fill that at some point. So once my take profit was hit, or once the trade was essentially done, we waited for another order block to have happen, which we get right here, right? We have a huge push on the downside. Boom, we get this candle right here. I'm sorry, we get this order block right here, order block. And then, right, this fair value gap has to be filled at some point in time. It's leftover liquidity in the markets. So all we're going to do is we're going to draw our Fibonacci exact same ways we did before. Market high to market low, just like that. And you can see right here, okay, same entry, same kind of setup that I had before. I wait for the 786 level to get hit and then put my stop loss slightly above, take profit all the way down here. And because again, ultimately your take profit for the most part though would be like right around here. Okay, because again, you want that fair value gap to be filled. However, you could also put it all the way down here if you think the market's going to go down there. But let's say the market goes all the way down there. We can go ahead and press play. And just like that, you can go ahead and see the market did exactly what I said it was going to do. Okay, hit the fair value gap and then just kept on running. Okay, and then that goes to where we are today, I believe. Hold on, let me take this. Yes, right, just like that. So you could have hopped into the trade again. Take profit 1 would have been hit. Take profit 2, take profit 3, take profit 4 also would have been hit. You would have been done in and out for the day. Okay, so that was a quick breakdown of the trade that I took this morning, as well as a setup that I could have also taken this morning, but I chose not to. Overall, I'm really happy on today's setups. I'm not complaining at all about it. Again, I don't want to sound like, oh, I didn't mess that on $300. Like I don't want to sound like those types of people. But aside from that, that is overall for the recap for the day. Okay. If you guys have any questions, comments, or concerns, please feel free to reach out to me on Instagram. You could also, again, Discord is free, right? Got nothing to sell. Discord is free. You can go ahead, hop in there. I send, just updates on markups. I send updates on news. I send, trade alerts, everything along those lines. So that way you guys can go ahead and get the best results possible. But everything's in the link in my description. Okay. But with that being said, hopefully this video was helpful for you guys, and I'll go ahead and I'll see you in the next one.